It's so much about the team. What market they're going to pick matters, but they're going to shift around with the idea and the specifics. They're probably going to stay in the same market, but that team is going to define, are they good enough to feel their way around in the dark and stay alive long enough? Are they great founders? That to me jumps out as the most important thing. You can have a really terrible idea and an amazing team, and they can either make it work or they'll pivot.
Welcome to another episode of Outsider Inc. I'm your host, Ian Hathaway. Today's guest is David Cohen, entrepreneur, investor, and ecosystem builder. He's best known as the co-founder and CEO of Techstars, one of the largest startup investors worldwide that redefined what it means to support founders in faraway places. David is a pioneer in investing in outsider markets, one of the most influential voices for backing founders beyond the traditional tech hubs, and a global leader for building startup communities where none existed before. Long before Techstars became a global platform backing thousands of startups and dozens of unicorns, David was a founder himself, building companies, experiencing real wins and real failures, and learning firsthand what early-stage entrepreneurs actually need when the system isn't designed to help them. Out of that experience came a radically different approach to investing in mentorship, one rooted in trust, long-term thinking, and community support, rather than short-term transactions or manufactured hype. What started as a small, local experiment in Boulder grew into Techstars, a global network that helped launch companies like DigitalOcean, Zipline, and SendGrid, while reshaping how founders are evaluated, supported, and connected across markets all over the world. Through Techstars Ventures, David has also been a first-check investor in breakout companies like Twilio and a generation-defining investment in Uber, which became one of the largest returning venture investments of all time. Recently, David returned to the CEO role at Techstars at a moment of real change for founders, for startup ecosystems, and for the venture industry itself. Today, we'll trace that journey from his early influences in first startups to the philosophy behind Techstars, the hard trade-offs of scale, culture, and impact, and the work he believes is still unfinished for the next generation of outsiders. David, welcome to Outsider Inc.
Thanks, Ian. Great to see you. I'm super excited to do this with you. And thanks for the great lead-in intro. That's awesome.
Well, it's great to see you. Thank you for being here. I've really been looking forward to this one. It's great speaking to a mentor of mine. We'll go to the beginning of your journey in a moment, but I'd like to start out a little more broadly, if we could. You built a career largely challenging the idea that only a handful of zip codes produce world-changing companies. Some of the most influential voices in tech have argued the opposite, that Silicon Valley is the only place to be. I feel like those voices quieted some during the pandemic, but they've gotten loud again during the AI boom. What does the Silicon Valley-centric view, or really the Silicon Valley-only view, what does that get wrong about entrepreneurship, even tech entrepreneurship, how it actually works?
It's funny how that is coming back again. I've noticed that too. It's obviously self-serving for people there to want to have great founders be there with them. And the challenge is when the story is this is the only place you can do it, it just ignores all the readily available data to the contrary. It's been a sort of personal pet peeve of mine when people say that, and you can't do it anywhere else, just kind of irks me. And it's very obvious that great companies are being built all around the world. And so it's not that Silicon Valley is also more than one place now. The Bay Area, San Francisco, San Jose, pick your favorite part, Palo Alto, are great startup communities and likely will be for a very long time, if not forever. And there's zero negativity that I have towards that or anyone who chooses to be there, but it sort of disrespects a lot of other places that already are great startup communities or will be in the future. And I love helping those startup communities rise and succeed. I know you do too. It's one of the things we have in common. And I think you're going to continue to see the same trend and pattern, which is that more and more great companies are started all over the world. And at the same time, a lot of them will end up in the Bay Area, as most of the big companies in the Bay Area are from someone who moved there from someone else in the world. What it misses is a big chunk of the opportunity, I think, if you're an investor.
Yeah, 100%. And I love that you touched on the data. That's actually one of the reasons I started this platform, was wanting to tell more stories and staring at the data saying, look, there's literally hundreds, if not thousands of companies that we could tell the stories of that have had massive outcomes far from Silicon Valley. And that goes beyond those, as you mentioned, that are started somewhere else and evolved there just to have access to those markets. For you, that conviction didn't come out of nowhere. It's been earned over, an expansive journey. I want to go back to the beginning. For you, before Techstars, before Boulder, you grew up in Central Florida around your father's accounting firm. You witnessed your parents build a local tennis club from scratch with other families. I guess you could think of as a form of grassroots or community-driven entrepreneurship. What did those early experiences teach you then? And then what influence do you think they have had on who you are today?
I recently went to, I won't say the number, but a big number birthday for my mom. And my dad passed away some time ago, which I've written about. To go to her big birthday party and to see so many people who had been around the entrepreneurship that my dad had created in a different world. It wasn't tech entrepreneurship, as you said, accounting firm, tennis club, but so many people showing up for her big birthday that were still an important part of her life and talking about the way that my parents had impacted them in their life. That was pretty recent, but it's sort of the microcosm of what I love about it. And when I think back to working in my dad's accounting office, doing payroll for local companies and stuff like that and data entry, it was a community. It was a small company, maybe 20, 30 people, but they hung out together and they did things together and their clients loved them and they enjoyed being around each other. And so to me, work was always community from very early on. And I remember just going into that office and really liking the people. And even the dogs I had as a kid were found under that office in a litter that was just there. And we kept a few of them and found homes for the others. Same with the tennis club, right? It was 15 families that my dad instigated because he loved tennis, wanted to get them together. And those families built the foundation of this tennis club, which then had many hundreds of members. And so all my childhood friends, my athletic career leading into playing Division I college tennis was from those experiences. And I still talk to a lot of those people today. They're good family friends, personal friends. Play was community. So community was just woven into the way that I grew up. I think I saw the impact of that. And then as I got older and internet came along and personal computing came along, it was just a different mode, I think, to recreate some of what I had enjoyed earlier in life.
I wrote that down. Work was always community for you. Looking back on the arc of your career makes a lot of sense. You also hinted at being interested in computers, going off to college at the University of Central Florida, where you studied computer science in addition to playing tennis. What was your initial fascination or relationship to computing? Was it the rebellious nature of hacker culture, or were you more curious about future infrastructure for the economy? Like, what was the kind of the interest for you?
I mean, I was a kid, so it was games and freaking the phone system, which people probably don't even know what that means. In the early days, CompuServe was like a big innovation. You'd dial up on your modem and talk to a computer in another place. Before that was just bulletin boards. And in order to get access to a computer in another place, you had to use long distance calls. And your parents don't really like you to do that. So you figure out how to freak the phone system, which is getting free calls anywhere in the world using approaches that probably you shouldn't use. But it was figuring out how to leverage early networking. And it's like, oh, I could talk to someone in another part of the world. Like, how cool is that? Today we take it for granted, but I think when you're a kid growing up in a town of 20,000 people in Florida, and now you can talk to someone in Tokyo or Vancouver or wherever, that's pretty cool. That wasn't easy to do back then, and exchange information with them and play games with them. I started building games that could be played in a connected way. I remember playing this asylum game. The goal was to escape the insane asylum, but you're just literally typing walk down the hall or turn left. And there are no graphics. It explains to you the scene that you're in. And just learning basic to be able to do things like that and share them with people I was meeting around the world. It's just a way to be part of something much bigger than myself in this little town I was in.
Connectivity, interest in networks, that would be a theme that would continue for you. Shortly after college, you landed your first kind of real job at Automated Dispatch Services, a software company for ambulance dispatching based in Miami. Came in as a programmer, but quickly elevated yourself to managing an engineering team. It's also where you met David Brown, who would become your longtime business partner. And it's where you discovered that maybe you weren't meant to work for other people long term. So reflecting back on that experience, how did it shape you? And maybe more importantly, how did it reveal who you were meant to become?
I guess one way to think about it is it was kind of the first practical application of software and technology in my life. I always like to say I'm 1-0 in job interviews in my career. I'm undefeated. That was the only job I ever interviewed for and got before I starting companies. And it was this very important thing where they were dispatching ambulances and paramedic vehicles to pick people up in important life-saving or medical transport situations. Someone going back and forth to dialysis is still really important. And if it didn't work, it messed up their life. It caused them anywhere from a delay to death, right? And so you really want to make sure it works. And it was cool to apply the technology in that way. I remember reading a book about Borland C or C++, whatever it was, to try to be able to speak intelligently about it in the interview. I didn't know anything about the language. I learned the language on the job. So I realized, if I'm a programmer, I can learn any language. Like, that's not the hard part. You just have to want to do it. And so somehow faked my way into getting that job. And it sort of seemed to me that what this company was doing was suboptimal. It was creating software that was on outdated platform, very MS-DOS based and not graphical. And it was a time when Windows 95 was coming out and things were changing to graphical user interfaces and there was more connectivity. It just sparked something in me like, we can unsuck this. This sucks. And that ended up being the thing that was really defining for me. That's how I think about entrepreneurship. It's just caring about something and unsucking it, right?
Yeah.
It sucks and you want to make it better. And for me, that first job would end up being the first startup I would create. It was basically a better way to do dispatch in a graphical user interface. We weren't selling the service like that company that hired me was doing. We were instead selling software to let other people do that in a graphical drag and drop way to help them save people's lives and get them where they needed to be in a more intuitive and better way. And so it was just literally whatever first job I stumbled into was going to be the thing that I unsucked, right? And got into entrepreneurship around it as my first startup. So that was kind of that part of my career.
You left ADS to start Pinpoint Technologies. That's the company you're mentioning, to make ambulance dispatching unsuck, I guess, yes. Creating the software. You started the company with David Brown, of course, third co-founder, Bob Durkin.
That's right.
So that's the decision, your why, the belief that you could do it better. But you also made the decision to start the company in Boulder. What went into that decision? Why Boulder? Why did you move there to build this company?
So David Brown was also part of Automated Dispatch Services. So was Bob. We sort of all knew each other through that previous activity. And I think when we decided to go and start this new thing together, Pinpoint Technologies, which is the graphical computer-aided dispatch system we built, the reality is we were all in different places. I had just moved from Miami to Mesa, Arizona, near Tempe. David Brown had just moved to New York and was doing some consulting, and Bob was still in Miami. And it was literally like, hey, if we're going to do this, don't we kind of need to be together somewhere? I think back then it was even more important to be together. So it started actually as a very virtual thing, and people would fly into Arizona and we had a tiny little office. The company was actually called Write With Inc. before it was called Pinpoint Technologies Inc. And that was our way of trying to be funny because you write with ink and we couldn't think of a name. So that was literally on the door. And that was a 2-room office where we built this software for the first ambulance company that would use it. And through those conversations, sitting in a pizza shop, we all wrote down cities we were interested in. One of the cities that got written down was Boulder, Colorado. Other places included Asheville, North Carolina, and Orlando, Florida, and I can't remember, but we still have the napkin. And we started visiting a few of these places. And when we got to Boulder, we just all kind of fell in love with it. We had a couple experiences while we were here that were like, yeah, this is it. And so that's where we eventually got together.
Now that I'm recalling it, I actually do think I saw some kind of a napkin at the old headquarters of Techstars on the wall. So that's it. Speaking of writing with ink, I remember reading one of your blog posts from years ago about the role that luck plays in serendipity. It's funny, had you not chosen Boulder, would Techstars be a thing today? I'm glad you did. You moved to Boulder. Pinpoint ultimately works out. It grows. After about 6 years, it's acquired by Zoll Medical, a publicly traded company. Now you've got this exit, presumably some fresh coin in your pocket. But what follows next is not a straight line. You began angel investing. You stay at the company for a few more years. You step out 2004, try iContact, a mobile social network, which didn't work out, but I know you've talked about it as a failure that you're proud of and learned from. Then almost in complete opposite, Earfeeder starts as this personal side project and gets acquired remarkably fast. Take us through that stretch. How did the experience of having a meaningful win, a thoughtful failure, and an almost accidental success, how did that shape how you understood entrepreneurship, what matters, what doesn't, and how founders themselves might be misjudged?
In that period, it was, okay, I'm invincible. I created this startup and, we sold it to this public company and started playing around with angel investing, but wasn't really doing much there. Maybe made a few investments in iContact, which was a mobile social network. And for people who remember Foursquare or Looped, same thing, right? That's what we were working on. It was right around that time, kind of a friend check-in. Where are my friends? How do I get to them? What are they doing? Kind of app. The valuable lesson that we learned there, and again, doing it with the same people. Distribution is everything, and the internet's not quite there yet, and there's no app store, right? And it's very hard to get your app in front of people in that era. I think we started that company to learn, we can do anything. Let's go do a consumer thing because that'll be big. We used C++ before. Let's use Java this time. We were an enterprise software company. Let's do a consumer thing. Just change it up because we're awesome, right? We can do whatever we want. So we really didn't leverage the strengths that we had built in the industry or even with the software stack or the network we had built. And somewhat predictably looking back on it, that company just didn't work. And then building Earfeeder and sort of having a quick, but not that big of a win, you sort of realize, there is power in building something that people really want and getting it out there and people will find it and use it. But also the original company that acquired Pinpoint, Zoll Medical that you mentioned, the CEO of that company coming back and sort of saying, hey, you guys know you left half the money on the table 4 years later. It's like, you jerk. Did you really have to tell us that? Why did you have to tell us that? That was a really shocking moment, I think, for David Brown and me. Wow, we sucked at negotiating that deal and we could have had twice as much money quite easily. And that was significant. Why? What's been going on in these companies that work quickly or kind of didn't work at all? And why did we negotiate so badly if we were so awesome? And I started to sort of realize that the things that were working had people that were more experienced around them. We had gotten lucky. We had nobody around us, right? We figured out everything ourselves and had no mentors. But a lot of the things I had become loosely associated with or built on my own that were working were because of some person who made a big difference or set of people who made a big difference. And so that's right around the time that Y Combinator launched. And I sort of reached out to Paul Graham and said, hey, love this. Can we do this in Boulder? We love Boulder. And the answer was, no, that's not interesting to us. And so started to think about doing something kind of like that, but much more community oriented, network oriented, to take advantage of the strengths that we had in Boulder that would become a different way to invest and become Techstars. But at that time, I think it was very much about the realization that networks matter a lot. Who you know matters a lot. What expertise you bring to the table matters a lot. And it's not just because you're really smart that you're going to be successful, right? Some other things have to come into play.
I've always wanted to ask you that. I've heard the famous story of you and Brad meeting. He told this story earlier on this podcast, how you met through one of his random days where you showed him the Techstars pitch. After about 10 minutes, said, great, as long as you're not a flake or a crook, I'm in for $50K. He calls Jared Polis, successful entrepreneur, current governor of Colorado, who says, I'm in for $50K. What is it? I love that story. It's amazing in that how serendipitous it is, how Techstars clicks together in that moment. But it also encapsulates for me how giving first can give a person back so much more in return. It certainly did for Brad. I've always wondered where the original idea came from. It sounds like from the pain of leaving money on the table, the timing of YC.
Yeah, that's right. It was at a moment when David and Bob and I were thinking about what we were going to do next. And one of the ideas was just lean into angel investing. And the experience with angel investing had been meh. some people we met at coffee shops or some angel groups and not really enjoying the experience, not being very hands-on. And yeah, sometimes it seemed like it was working, but most of the time seemed like a good way to turn a medium-sized fortune into a smaller one. So like, what could we do differently? YC was an influence in that moment in Boston. There was another program called CRV, Charles Rivers Ventures Quick Start, 100K check in a 15-minute meeting that inspired me a lot. Do I believe in these people? That's all I need to know. I'll make an investment. And so yeah, it was all those things coming together, but it was a brainstorm. And I remember there were like 12 or 15 ideas. And this was the one that we just kind of, David and I started to gravitate towards.
So in those earliest days, you're gravitating towards this mentorship driven model. What was the big bet that you were taking? What did you believe would be true that you couldn't quite prove yet until you got those first classes going?
Yeah, I think it was that you could do this in Boulder because, I mean, the most common question I get asked about Techstars is why did you start it in Boulder and not in New York or San Francisco? And I always say, because that's where I live. But it was that people would be drawn to a network of experienced mentors and value that more highly than the money. Because the money we were offering was $6,000 a person for 3 months, which was basically enough to fly there and live there and maybe eat. The real value that people had to place was in the people who were going to help you be successful. And I think that was a pretty big bet that companies would fly from all over the country to Boulder and spend 3 months with us to get that.
Did you think of Techstars as more of a program, or did you early on understand that this was fundamentally a network-driven business?
I thought of it as a program initially. And I think we often talked about it as like, this will just be fun. And like, if it fails, it'll still be fun.
Yeah.
We'll meet some people and hang out with them and hopefully do more stuff with them. But it was 302 companies, I think, applied for the 10 spots. And it was, to me, just a 3-month program where we were going to try to help these companies. And at that time, frankly, it was the mentors in Boulder and those 10 companies. And that's all it was. There wasn't a previous class or 20 or 50 or 100 previous classes to become your customers. The mentors really didn't know how to mentor. We learned that together. They knew how to advise, which is you take equity and you sort of work at the company once in a while. But this give first idea of how you mentor and don't really expect anything in return to build your community was pretty new. I think for Brad and maybe for Jared, it was pretty natural. They sort of taught us that philosophy, and give first, of course, became the mantra. It's how mentors engage, but it's also how alumni engage over time. But back then, there wasn't much of a network. There were not that many mentors, maybe 40 or 50. A lot of them weren't nearly as well known as many of the ones we have today. And I think we thought, oh, at the end of the program, they'll have a decent pitch and we'll try to introduce them to some investors and pressure them to write checks, which we did. Clearly, it evolved from there into more of a network as a value.
Just kind of reflecting on those first few classes that were in Boulder, what actually made the model work in practice? Not just the theory. You talked about give first, we talked about mentorship, but any other critical choices you made along the way that you said, these were the core things that we did right that enabled us to scale this model across the country and eventually across the world?
It pretty quickly became evident that the network was the value after the first program or two. And so we started to be much more deliberate about building the mentor network and stayed pretty focused on quality. Now, quality is a relative term. Of course, you're talking about very early companies that probably can't attract venture capital yet. There also wasn't quite as much venture capital available. It's about the people, right? It's about the network of mentors you put together and the people you find, and instilling in them the philosophy that they need to help and give back not only to their mentors, but to the next class and the next generation of startups in their community. So we showed them like, hey, we're not asking for anything. All these mentors that are here helping you, they don't have any upside or stake in this. Maybe some of them want to invest, or maybe some of them want a job, but they're giving first. And that's what you should do. And it just built this snowball that got bigger and bigger. And now that network is so powerful and helps the previous generation and the next generation succeed. I think just thinking of it as a quality network where there are cultural norms, you are expected to give back what you got to somebody else. It doesn't have to be the same person. That's what makes it non-transactional. But you need to buy products from the network. You need to give them feedback. You need to introduce them to your investors if it's relevant. These things became a social norm that really created a lot of momentum.
think I had my first sort of experience in a Techstars accelerator in 2017 or so as a mentor. And mentor madness for me is still amazing, or mentor magic, whatever you want to call it. But it's always the same for me. I'm looking at my calendar and it's like, oh, I've got a busy week, but I'm taking this whole day on Thursday. Damn it. Why did I sign up for this? What was I thinking? And then inevitably, the end of the day, it was the best day of my month. And it just happens every single time. It's just such an easy way to plug into something meaningful. And I certainly feel like I learn more and get more out of it than the companies that I'm mentoring. Evolving a little bit, Techstars begins to operate with some real scale, dozens of cities, thousands of founders and partners. The thing you were most intent on protecting wasn't efficiency or brand dominance. It was the mentorship quality and founder trust that defined the Techstars culture. You've also said that protecting culture sometimes means making very hard, unpopular decisions, like letting go of people, shutting things down, or even disappointing communities that helped build Techstars in the first place. Looking back on that, what were the hardest compromises that growth demanded of you? And how did you decide in real time that protecting the long-term mission of Techstars was worth taking some short-term pain?
There's a lot. We're 19 years in, right? In any journey, you're going to have a lot of things you look back on and say, maybe we should have swerved left instead of right there. But in the end, you're still farther down the track, right? So I think the biggest regrets that I have are in those instances where we stopped operating an accelerator somewhere. And that's just getting out over your skis, not having the capital to support it or not having the right people. And there was so much pull going on for us to be in so many places. And some of those places we had to say, yeah, this isn't working. It's not the right market for us, or it's wrong people, or it doesn't work culturally with how we do things. And essentially leaving those markets and trying to replace it with other things like Startup Weekend or Founder Catalyst programs. But it's not the same as investing in 10 companies every year in the community. So when I came back almost 2 years ago now as CEO, I did so with a set of recommitments. One of them was bigger isn't better, better is better. It doesn't mean the smaller is better either. They're just different. You can get bigger and continue to be better. You can get smaller and continue to be better. And we're sort of very careful now about where we're expanding to, the companies we're investing in. There's been a real return to that focus on quality and just better being better. Improved investment offer leads to more money per company, which leads to fewer companies, but more focus for those companies. And so we're down from our peak very intentionally in terms of volume on a lot of things. So that was a big one. Capital formation, always a challenge. We're a multi-billion-dollar asset manager now, trying to match that availability of capital as markets come and go with your footprint, always a challenge. That's been a thing that I think we've had to focus a lot on and had some mistakes along the way. For example, trying to lead Series A rounds and write $5 to $7 million checks. It turns out we weren't really built for that. We're much better served to be sort of pro rata investors while we let others come in and sit on boards and do that sort of work. It's a different kind of approach. You learn these lessons over time. You tweak, you improve. In the last couple of years has been a return to a lot of those early values, really focusing on helping founders as your primary constituent. Another one would be the whole corporate partnership business that we built, which is a really powerful way for us to have grown. And we wouldn't certainly be what we are without that either. But again, I think we picked some of the right partnerships and maybe some of the wrong ones. And so over time, again, you learn how to focus that and be more focused on better instead of a lot. So that's the theme that runs through it all. I think for me, we got a little lost in a lot as opposed to better. And we're back on track there, which is exciting.
Well, thanks for sharing that. I'm happy to see it. I'm happy to see you back in the saddle as CEO. I'd like to shift gears if we could. You've invested in a lot of great companies and founders at the earliest parts of their journey. SendGrid is a great one. We had Isaac on. He had some anecdotes for how you fundamentally helped shape the course of that business early on, you and Mark Solon. Twilio, Uber, obviously generation defining first check investments and others. Over time, you've landed on an evaluation mantra that you've repeated a lot, team, market, progress, idea. Walk us through how that framework emerged for you, why team is so important that you say it 3 times. And if you had to break it down into some concrete signals, what tells you, hey, look, this is an exceptional team and we should back them even when there's no traction?
Well, having 6 things seems better and more scientific than having 4. Right? If you just said team market progress idea, that's kind of boring. Yeah, it's so important we say it 3 times. I think it's just from experience, right? Everybody knows about the 10,000 hours thing. We've been investing in a lot of startups. And again, that is a formula for what we do at the accelerator stage. A couple people dogging an idea. It's so much about the team. What market they're going to pick matters, but they're going to shift around with the idea and the specifics. They're probably going to stay in the same market, but that team is going to define, are they good enough to feel their way around in the dark and stay alive long enough? Are they great founders? That to me jumps out as the most important thing. It's intrinsic motivation, which is a phrase Brad came up with some time ago. They're doing it for some reason other than the spreadsheet fantasy.xls that tells them it's going to make them a lot of money.
V6,
Exactly.
final.
It's just wrong by definition. But do they do it because they care about changing the world in some way? And I often tell that story with Uber. Ryan Graves, who I met mentoring at Techstars, driving through Colorado, which if it wasn't in Colorado, he wouldn't have been driving through. That's how I met him. It was very much a vision of the future, very much about him. Like the feedback he was giving me on our companies was amazing. Like I could tell he was a fantastic entrepreneur. He was going to be the first employee of Uber Cab, which became Uber. And the original CEO. Is a lot of luck involved in that. But I think that sort of experience that I had, Jeff Lawson at Twilio, through mentoring him, and it's just like, gosh, this guy really knows his stuff and he really explains things well and he understands these businesses intuitively, almost immediately. So backing the right people, they'll figure out the rest. And so that's how it got really elevated for me, especially if you surround them with a lot of data and experience in a mentor pool. I think most of it is just from doing it long enough to realize like that's the only thing that matters. I mean, you can have a really terrible idea and an amazing team, and they can either make it work or they'll pivot.
Maybe with that in mind, what would you say is a founder trait that you overweight on now that maybe you underweighted a little bit when you were doing some of those first angel investments? And then maybe conversely, what's something that other investors obsess over that you don't think is important at all?
I think grit is the one that, just cockroach, tough to kill, figures out how to stay alive. If I had to pick a second one, it would be frugality. I've watched so many great companies get built on so little resource, just being really careful with their money. Grit and frugality, I think I overweight. I really love the stingy founder who's like, not stingy on equity, but stingy on like how they're going to spend this capital or this revenue or this investment. It's got to be on the right things. It's got to be on the things that we really, really need. I'm not freewheeling with the resource. Now, of course, people build big companies that way too. You could say, hey, David, you just talked about Uber and they weren't exactly frugal. But I think in the very early days, they were, right? Until they really knew they were onto something. And so those are the two. I think on the other side of it, people overvalue. I would 100% say experience. I think experience is massively overvalued. In fact, it can be sometimes a detriment in a startup that is trying to change the world in a different way and not trying to do it like everybody else in the industry does it. I'm not saying experience is bad, but I think it gets, overweight quite a lot.
Yeah, you can see things through the lens of the status quo. I definitely agree with that. So I want to mention the term outsiders. Obviously, that's what this show is about. Entrepreneurs from overlooked places and backgrounds that don't necessarily fit the prototypical Silicon Valley mold. I feel like we've talked a lot about Techstars from this geographic lens, but it really is more than that. Over the years, the entrepreneurs I've worked with, they don't necessarily come from tech backgrounds. They're obsessed about a particular problem for an end customer. Oftentimes, they might have been that end customer, and they're leveraging technology and the principles of product businesses and scale to bring solutions to those customers in really impactful ways. So I think it's worth pointing that out. But in your experience, what do outsider founders do systematically better than insiders might? And where might they stumble in a predictable way?
I think a lot of what we saw or still see over the years are people who are undervalued by the market in some way. They haven't done it before. They don't have a big network, and that's why they're coming to us. I think they're quite hungry typically for coaching and experience because they don't already have that in their network. It's sort of what defines an insider versus an outsider, perhaps. Are they connected in that way? And it turns out there's a whole market, as you know, of people who are not necessarily well connected or assumed to be outside whatever the circle is. But guess what? There can be enormous untapped opportunity and talent in that segment of people and that set of places. And we're seeing it over and over again. You just mentioned you had Isaac on. Isaac wasn't highly connected. He was just incredibly deep technically and incredibly passionate and motivated. And somebody took a chance on him because he didn't have the network that people just knew to do that. He does now after IPOing a company and all that. I think what we learned over time is that's our sweet spot. That's our bread and butter. That's what we're really good at. Let's not go try to get the fifth time founder that's already IPO'd twice. That's a mentor for us. That's not the founder profile. And that's always been the knock on us. You can't make it work unless you have the insiders, David, right? Like that's what they would say. I was like, well, take a look at the accelerator track record. It does work. And I think those people value those things. And so it's matching that where they're hungry for the coaching. They're hungry for the network almost more than the capital. That I think is where the magic really happens.
Obviously, you have trained and spun out multiple fund managers who are pursuing a similar type of thesis, investing very early with hands-on mentorship and support, oftentimes in founders that get overlooked by the venture industry broadly. So from that investor's lens, what makes it so hard for the venture industry structurally, psychologically? What makes it difficult to bet on outsiders, even when the data keeps proving that these companies and these founders matter?
The typical design of a venture firm and the incentives that venture capitalists have are such that you end up with a small portfolio of very big check sizes and therefore larger ownership in a smaller number of companies. That then drives a behavior pattern where that investor feels like they need to be close to that company physically. They need to be very involved because, 1/15 of my fund is in this company. And again, nothing wrong with any of that, but that is a highly concentrated model where most venture funds operate, especially kind of Series A, Series B funds. And that causes them to want to look in familiar places close to home and not take chances outside of that. And so you see a lot of geographic proximity in that type of investing for that reason. So along come other things like AngelList or Techstars where it's more diversified, higher volume. Funds like your microfund means that you're not probably the biggest owner in that company as it grows, but you've got a lot of shots on goal and it's probably 1 in 50 or 100 that are even going to end up being big companies. And so I've got to place those bets. And I think seed and especially pre-seed, you just have to be built different and think different than classic venture capital. It sort of sets up, right, where if somebody's saying run $1 billion fund, of course you're going to start writing $30 or $50 million checks or more because that's the model. And that's probably what you should do with that type of capital. But I think with seed and pre-seed, diversification matters a lot. Every asset class learns that lesson eventually.
Yep.
Venture capital will too. There will be the indexes, just like there are in public markets, which have now overtaken managed funds by a lot, right? Where people realize, oh, we should just take the returns the market's giving us. And I think that's why you're starting to see institutional versions of pre-seed, like Y Combinator, like Techstars and others, that can deliver that kind of diversification and performance without following the traditional model.
One of the big takeaways I had from my time as a Techstars employee working with Jason Seitz, who we also had on the show, was the data is just crystal clear. The earlier you go, the more diversified you need to be. That's not surprising when you explain it to a person in finance, but for some reason it's still slow. On the GP side, certainly on the LP side, I was in many uncomfortable conversations with, institutional allocators, but I think it's slowly starting to make sense.
LPs are trying to allocate probably between a small number of managers that are very big name and run that traditional model. And the reality is they could get that diversification a different way. We will see that continue to change. It's already clearly changing. Venture is very much in the barbells when you look at the data. Like people make money in the late stage and they make money in the early stage. Mm-hmm. That middle part is black magic and a lot of luck is involved and it's very difficult to do it multiple times in a row.
Well, speaking of barbell beginnings, middles, and ends, I want to talk about you jumping back in the CEO seat After nearly a decade and a half leading Techstars day-to-day as either CEO or co-CEO in 2021, you took a step back, moved into the chairman's seat. You were deeply involved still, would always see you around, but just a different vantage point. In 2024, you come back in, you return as CEO, felt very deliberate. So I'm curious, what do you see, first of all, from having that vantage point, being the CEO in the weeds day to day for a long period of time? From the beginning, the company goes through all these cycles and evolutions. Then you sort of step back a little bit as chairman, and now you're back in. What felt important enough or unfinished enough for you that you wanted to put your hands back on the wheel and lead the company day to day?
It was ironically right around when that whole founder mode meme came out, that only the founder can just go in and say, I'm just going to change this and I'm just going to do it this way. I'm not going to build consensus and all that. Not exactly how I operate, as you probably remember, right? But in that moment, I sort of referenced the 3 recommitments that I was making. It was a conversation with the board where Mael, who had been running the company for 3 or 4 years that I helped recruit and bring in, she had grown a lot of scale and done a lot of great things. But I think from my perspective, having been a little more outside as chairman and watching it, when you're in it, you're just in it. You're working in the business, not on the business. When I was chairman, I was working a third to half time, really supporting her and helping with capital, right, with LPs. I sort of just more clearly saw what I thought the error was. And I thought that error was basically a focus on quantity instead of quality and mistaking bigger for better and not realizing those are just different things, right? And again, the incentive structure in venture capital rewards more capital, more management fee, more shots on goal. But if you're just focused on that, you start to sacrifice on quality and you end up, especially in pre-seed, having to do so many more things to just get to the same place. And so the recommitments were bigger isn't better, better is better. Help founders succeed. Like, are we here for LPs? No. LPs are an important part of our system and they're partners and we need to make money for them to be successful. But that's not our why. That's not our reason for existing. They too need the entrepreneurs to be successful, the founders to be successful. So we're all here to help founders succeed. And that has to be first and foremost. So that was another. And then embrace startup communities. That's something I don't need to explain to you, having written about it. That's what brung us, and that's why we're here, right? So we need to recognize that the startup communities we operate in are way, way more powerful than we are as a company. And we need to continue to incentivize and reward them for being partners in what we do. So we've done a lot of work on that as well. But it was also, in a way, a return to values. It wasn't that we lost any of the values, but they weren't maybe being lived in the same ways. And so hard for someone other than a founder to do that. So I sort of said that to the board in a very free-form way. And the board said, we're not going to run a search if you have the energy for this. Let's go do it.
Awesome. So I want to ask maybe a different type of question. You've been building companies and communities for decades now, being in founder mode, being in the day-to-day. You've also worked alongside, supported, invested in, mentored hundreds of other founders who have been through those experiences. It's intense, right? And there can be a human toll because we have other modes, right? There's dad mode, there's husband mode, there's neighbor and brother. So when you look back on this journey, what is it maybe demanded from you personally that someone on the outside might never see? What has been successful for you in balancing the whole human self? Things you've done well, but maybe more importantly, things that you wish you had done better.
Yeah, I love it. I can kind of bring some things full circle that we talked about a bit earlier. I think in my first stint, which was 13 years or whatever it was, building the company, it was my identity and it was everything that I sort of thought about myself. It was wrapped up in Techstars. And, I was working till 3 a.m. many days and traveling way too much. It was pretty unhealthy. And I literally have a Fitbit chart of every time we raised a fund showing my weight flying way up and then slowly coming back down again. Just unhealthy stuff, right? And I just committed when I came back, like, hey, as part of this, I'm just not going to do it that way. I'm not going to travel in this crazy way. I'm going to exercise. I'm going to prioritize my family and just do it differently. And so I think, again, during that chairman period, I was like, wow, this is really different. I can go back to work without losing all of that. And the first full circle thing is I discovered this new sport called padel, and I loved it. And I'm a lifelong tennis player, played college tennis and all that. And I abandoned tennis for this new sport. And I went out and I recruited about a dozen of my friends, and we built a paddle club here in Boulder, and it's 5 courts. And I play almost every day, often in the middle of the day. I just find it to recharge me, and it helps me be more productive the rest of the time. It keeps my energy up. I love this sport, and it's balancing for me. And so I've just really prioritized that, because when all you do is your startup or your thing, yeah, you make a lot of progress, but it can be pretty unhealthy. And I think you lose the longevity of it, right? You sort of sprint too much that you lose the marathon. I'm trying to approach it differently now, in that sort of work-life harmony. I think you probably heard the phrase, you can never get balance, but you can get harmony.
It's definitely easier said than done, especially for people trying to get their company off the ground. But a consistent theme is how the company becomes your identity. At times can be useful for pushing things forward, but can also be dangerous. So is it as simple as having strict rules like, I will exercise once today for at least 20 minutes. I will have dinner with my family. Do you feel like you need to have, I guess, a set of rules in place? Otherwise, it becomes a slippery slope?
For me, yes, because I'm an engineer by background and rules really help me. But I think it's probably different for everyone. I remember working with a nutritionist, like, you can have one burger every 2 weeks. I'm like, okay. And I have one burger every 2 weeks, so I could look forward to that, right?
And how good is that burger?
It's amazing. I'm a rules-based person, and I find that's what works for me, but I don't think that's necessarily what works for everybody. And I have to mention here another book by Brad and his wife, Amy, The Startup Life, a great book for understanding how you might approach it, and different things will resonate with different people. I think in that book, what I contributed was always have a light at the end of the tunnel and make sure it's not a train, right? Or something you're looking forward to with your family. That in our cases, we will always 100% of the time have a trip together that is planned in the future. It might be far off, it might be soon, but we don't let it be, unknown. We know there's a break coming, and we know when it is.
That sounds really healthy. One of the things we do, no matter what, I have dinner with my family every night, and we call it Roses and Thorns, and everyone says something good that happened today, something bad that happened today. But it's a nice little ritual. So look, kind of last big question. If we're having this conversation in 10 years, what is it that you hope that you've been able to accomplish with Techstars and startup communities that you're involved with generally? And then maybe looking back over the arc of everything that you've created, not just you, but the team and everyone around you, what do you hope is going to be different for founders in the future because of the example that Techstars has set?
I mean, the thing we talk about as our ambition at Techstars is to get to having invested at the early stage in $1 trillion of value in the portfolio. We're at about 300 or 400 billion now. If we can look back and say, wow, look at this stuff we invested in that had $1 trillion worth of impact in 10 years, that's actually the goal we're all talking about right now. Now, that sounds kind of economic and less mission driven, but I think in order to achieve that, we will have done a great job helping founders succeed, connecting them to a very powerful, if not the most powerful startup network in the world. And we will have built a great mentor community that gives back. I think that should just be a starting point for what the network becomes. And when I think about funds like yours that maybe in some small way are born out of our community, I know there are now dozens of those. We're investors in a lot of them through Techstars Fund as well. That impact can be many trillions of dollars of value creation. And I think that's just a proxy for helping founders succeed. And that's what I want to be able to look back on and say, wow, we really punched above our weight in this little Boulder, Colorado town that grew a movement around the world.
Well, it certainly has helped me and many others in countless ways. I feel like the philosophy, the mentorship driven approach and give first has given me a blueprint for my career and my life. And so thank you for helping give me that direction. It's been awesome talking to you. But before I let you go, we have one quick segment called Beyond the Bio. These are just some quick hit questions that let you step away from your resume a little bit and dig into what makes you you. Sound good?
Okay.
All right, let's do it. What's a quick piece of advice from a mentor that stuck with you throughout your journey?
Forget about the past. You have no way to control it.
Yeah, that's a good one. Who is an unsung hero in your life, and what has been the impact they've had on you?
Probably my dad. We talked a bit about it, but just the example of community and entrepreneurship and caring about your employees and team and building something in a place that nobody thinks of as a place you build stuff.
Who is someone in your local startup community or your broader network who doesn't get enough credit and deserves a shout out?
Oh man, I hate to pick one person, but screw it. I'll do it. Everybody else listening, don't think that I don't appreciate you. Jason Mendelson, Jason.
Yeah.
The quiet force behind a lot of great stuff that has happened in Colorado.
Tell us something most people don't know about you, something outside of work. Could be a hobby, a favorite travel spot, a guilty pleasure, or a hidden talent.
I appear to be the new ambassador for the sport of padel in America.
Actually, I think who else was on here? Oh, Scott Dorsey is also.
Dorsey's into padel?
Yeah, he's into it.
I might have been the one that was like pushing him to check it out. He came from tennis.
Yeah, that might have been his same answer for the same question.
It's very addictive. I warn you, if you get into it, you'll never get out.
I'm going to check it out. What are one or two songs you'd like to add to our Spotify Founders playlist? Something that fuels your workday or has inspired you as an entrepreneur?
Oh my gosh. What jumps to mind is just Money by Pink Floyd. But again, I don't want to seem like that's my whole world, but it kind of gets you going for that outcome.
I love that. That song will always be with me. It was the first album my dad gave me. I think I was probably inappropriately young for that. And I love just singing, "Don't Give Me That Good Bullshit." So yeah, that's always been very special to me. So how about a book? Something that's been valuable to you on your journey or something that you recommend to first-time founders as they're getting going?
I'll just give you one I read recently that is very topical today with AI and the coming wave of quantum computing, which is going to be a kind of ridiculous collision. But if anyone builds it, everyone dies. Fantastic book about the sort of eventual outcome of building super intelligent AI. And it's a real eye-opener, really interesting book.
Okay, last question. If you could give one piece of advice to someone who's about to start their first company, particularly someone who's a bit of an outsider, what would it be?
Surround yourself with great people and don't F it up.
That's a great way to end. David, thank you so much for joining me today. I cannot wait to share this episode with our listeners.
Thanks, Ian. Always good to hang out.
That's a wrap for today's episode of Outsider Inc. A big thank you to David Cohen for joining us and sharing his incredible story. Having David here meant a lot to me. David is a mentor, and the philosophy he built at Techstars is a blueprint I've carried into my own work. What struck me most isn't the portfolio or the unicorns. It's the through line. From his dad's accounting office in a small Florida town, to a pizzeria napkin sketch in Arizona, to a global movement built on giving first. It was always about community. And what David is modeling right now, coming back, slowing down, choosing quality over quantity, is something every founder who's ever lost themselves in their company needs to hear. The work doesn't have to cost you everything. For the outsiders listening, surround yourself with great people, don't mistake scale for progress, and remind yourself that bigger isn't better. Better is better. If you want more from Outsider Inc., don't forget to subscribe to the platform at outsiderinc.substack.com. It's packed with highlights from today's episode and bonus insights you won't want to miss. You can follow Outsider Inc. on YouTube, Instagram, TikTok, and LinkedIn at Outsider Inc. Pod. You can also follow me on X at Ian Hathaway. Outsider Inc. is produced by Spellbinder Media. We'll be back soon with another fascinating outsider conversation. Until then, thank you so much for listening. And remember, great entrepreneurs can come from anywhere. See you next time.